This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association. Your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Mark Magnuson.
Good afternoon. This is Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Mark Magnuson. Today is Monday, August 29th, 2022. Looking forward to a great show ahead. We're so glad you could join us. In today's show, I will talk with Jim McCormick of agmarket.net about the drought situation in China and whether or not that country is going to have to increase its imports this year. We will also have a look at the ag weather outlook, but first, let's run down the markets.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
Well, we're at the end of another trading day here on Ag Matters PM, and we are joined now for some market analysis by Robin Schmahl from agmarket.net. Robin, what did we see today on the grains?
Well, we saw quite a divergence. Corn was higher, beans lower, and really close to the end of the day, we saw some significant pressure on front month September beans, and that's because they're moving closer to deliveries. Right now, the options went off the board last Friday, but that reaction of divergence there really was due to the Pro Farmer Crop Tour when they came out on Friday and released what they think is actually numbers there. They looked at corn at 168.1 bushels to the acre, compared to USDA's 175.4. That was quite a bit of a shocker to the market. Now, we have to realize that part of this was already factored in. There was some anticipation that we could see some real strong gains on Sunday night trading, but that did not materialize. Actually, the overnight trade was a little bit subdued relative to what we saw today. So it gained some steam as we started moving through the day. But that's the reaction based off of that. Looking at a production of 13.759 billion bushels for the crop versus USDA's 14.359 billion bushels. And that tightens up that supply and demand ratio quite a bit if that comes to fruition, and we don't know exactly what's all going to be coming in the end. Now, one thing we do have to remember is that the corn crop really isn't going to be helped anymore by any kind of moisture that could be coming through. However, the soybeans they could be adding some more pods to the top depending on the moisture that comes through in the stage they are in. So soybeans were under pressure today. Now, Pro Farmers counts weren't very far off from USDA at 51.7 bushels per acre versus 51.9 by USDA. Production was really close at 4.535 million bushels or billion bushels to 4.530 billion bushels. So that wasn't a big issue. The more of the idea that we're seeing is that we could be adding to this crop, and that's what puts some of that pressure onto the market today. Now, on the other side, in Brazil, Brazilian farmers have had a little desire to sell the last part of their crop, even though there's incentives there, little desire to sell that. So that's pushing prices internally higher. They want to set some of that stuff moved out to the market, but so far, some of it's being held relative to some of their inflationary situations there with their currency. And, so that's whether that's going to drive more business, over to the U.S. or not. That's really unclear at this point in time. Now, China is dealing with a drought, and one of the provinces that hit by a drought, they were just madly drilling wells recently in order to provide, some water for crops, for livestock that's in the severe drought area. Now, we're going to see a lot less production coming out of there, as well as we're seeing some of the production decreases we're going to be looking at in Europe. So that's going to create an interesting scenario as we move through the fall and into the winter timeframe, seeing what kind of a crop that we have when we finally get it all in the bin.
And Robin, what was the story today on the livestock markets?
Well, livestock was true to form. Feeder cattle were under pressure. So looking at triple-digit losses, or over $2, I should say, but that's in triple-digit losses, because of the higher corn prices. And they kind of moved that way, opposite of corn. So they followed that true to form. Over into the live cattle market, we did see some good strength holding for a while today in the front month August contract, but that contract goes off the board on Wednesday. So it has to follow itself close to cash. It did settle back toward the end of the day a little bit, but still retained some gains. Rest of the contracts were a little bit lower. Now, packers were anticipated to buy a little bit earlier this week due to the upcoming Labor Day weekend. We didn't see anything surface today. Didn't really even hear if there were any show lists that were put out or what they were looking at this point in time. Packers may try to capitalize on the higher grain price and may be very unwilling to buy or to bid much higher. Last week, the cattle that were purchased, 31% of those cattle were purchased for deferred delivery. So it puts the packers in a little bit of a driver's seat for this week, maybe even into next week, the holiday shortened week, but it puts them a little bit better position than they had been the last 2 weeks. Now, at midday, box beef prices were a little higher. Choice was up 76 cents, while Select was up $2.59. Now, that'll change by the end of the day, but that was the midday comments. Now, on the hog side, they finally found some good support. We saw some triple-digit gains, but that doesn't mean we're out of the woods yet, because we failed to close the chart gap in the October contract. That is going to be an anchor that's going to hold on to this market here from the technical standpoint. We got close. We got 25 points from closing that chart gap last week, but just could not do it. Now it's still there, but we are seeing the gains we saw today. And part of that was because the noon cutouts were up $7.03. Now, cutouts took a beating last week, and they've been trending lower the last couple of weeks. So this is good to see this. It's a little bit of a surprise. Cash hogs were down 88 cents. The last 2 weeks, we saw cash hogs actually higher on Monday, which normally they've been in the pattern of Tuesday and Wednesday, but we saw them higher on Mondays. But this week, that's not following suit. We're down 88 cents on the morning report. Now, China is set to release some pork reserves in September to ensure a meat supply during their holidays. They've seen some rising prices in the country because farmers have been holding back, and that prices have been going higher. So if they put some of that out, obviously we could see a little bit less potential export sales, which that's been kind of hit and miss all the while. And last week's export sales, based on the transition over to their new reporting formula, basically they were a non-issue. USDA retracted those for both the grains and the livestock, so we really don't know exactly what happened there. But we are seeing at least a little bit of light at maybe the end of the tunnel. Maybe technically the market was oversold, but still, the cash is maybe struggling a little bit, and that chart gap is still a concern.
Great analysis as always from Robin Schmahl of agmarket.net. Robin, if our viewers want to get in touch for some more analysis, where should they head?
They can give me a call directly at 877-256-3253, or they could go to our website, agmarket.net, and call the phone number there and get in touch with somebody that's available.
Robin, thanks so much for the time today here on Monday. We'll have a great week, and we'll look forward to talking to you again soon.
Thank you. It's always a pleasure being on your show.
With our market analysis here today, that again was Robin Schmahl of agmarket.net. And now we'll take a look at the numbers courtesy of the folks at Bar Chart.
September corn is up 15 even at 683 3/4. December corn is up 18 3/4 at 683 even. September soybeans down 70.5 at 1534 3/4. November soybeans down 23.5 at 1437 3/4. Soybean meal for October down 50 cents at 433.60. Soybean oil for October down 27 cents at 67.65. Chicago wheat up 35 and a quarter at 8.20 even. Minneapolis spring wheat up 23 even at 9.17 and a half. Kansas City hard red wheat up 29 and a quarter at 9.12 and a half. September oats down 1.5 at 4.16 and a quarter. On the Merc, live cattle for October down 15 cents at 142.90. Feeder cattle for September down $2.27 at 179.92. Lean hogs for October up $1.60 at 92.25. Pork cutouts for October up $1.37 at 102.62, and Class 3 milk for September down 37 cents at $19.87.
And that's a check of the ag market recap here on Ag Matters PM. We're going to go ahead and take a quick break here from our sponsor, the Iowa Soybean Association and the Soy Checkoff. And when we come back, I will talk with Jim McCormick of agmarket.net. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to Ag Matters PM from the Iowa Agribusiness Radio Network studios. I'm Mark Magnuson. Up next, I'm going to visit with Jim McCormick of agmarket.net. We will talk about the drought situation currently taking place in China's Yangtze River Valley and how that affects both the markets worldwide and here in the United States. Here today on the Iowa Agribusiness Radio Network, my name is Mark Magnuson, and I am joined today by Jim McCormick from agmarket.net. And Jim, just wanted to talk to you today, pick your brain a little bit about some of the reports that we've read about China importing maybe a little bit more than we were expecting this year and how that's going to affect things. First of all, do we know how much China is going to import and which commodities they're looking at bringing in?
Well, right now, what you're probably looking at is they are an importer of a lot of goods around the world. Pretty much, they're the biggest consumer of commodities, as they try to fill their population. Now, a couple of years ago, they imported almost 29 million metric tons of corn. They've scaled it back the last couple of years. I think this year the government's thinking they're going to import around 18 million metric tons. But since that reports have come out, we've seen a lot of headline stories about this drought as well as heat that is affecting parts of the China grain belt, and that's got people thinking how much more may they have to import to try to keep their grain prices stabilized at this point in time. Now, the one thing I want to make a note of is most of the region where this drought is going on, the Yangtze River Valley, is not actually their main growing region for corn and beans. So I wouldn't look for a massive uptick in importation, but overall, food prices going higher around the world is on every political leader's, pretty much on his front lobe, worried about it daily. So we will look for them to buy a little bit more. The other question really is how much grain can they get out of Ukraine? We know China had bought a lot of grain from the Ukraine. I'm not sure how much of it they've been able to get out of it recently. And that's the other question we'll see. That'll depend how much grain we end up actually selling to the Chinese.
And you mentioned that where the drought is taking place, the Yangtze River Valley, are they in China on the same kind of a growing season timeline that we are here? Are they in a different spot? Basically, what I want to know is if they get some rain right now, could that still help them? Or is that grain kind of just set where it is right now?
You're kind of looking at, if you look at China on the map, they're pretty much on the same growing cycle as the United States. So the reality is the window's shutting relatively fast for their corn market, just like it here in the United States. To get a rain, it's really going to add bushels to the crop. It probably could help the bean crop, though, a little bit.
But Jim, like you said, it's maybe not going to affect things too terribly crazy in terms of the numbers that are going to be imported. But is this going to be something that we're going to feel here in the United States?
Well, that's the million-dollar question right now at this point in time. I mean, the viewpoint is China is going to have to import more corn. The question is, what window is that going to be? And politically, are they willing to do it? The reality is we do a lot of trading with people we don't like to trade with. Europe's buying energy from Putin, where they're essentially at war with. The Chinese right now, Mark, are really not happy with us with what's going on in the Taiwan Straits. We sent a couple of carriers through there just recently. So we'll see. I mean, the talk of the industry right now is if China does have to be a little bit more aggressive importer, they're going to try to wait and maybe try to buy Brazilian grain this upcoming essentially into the spring and summer of 2023. So they will buy some grain from the United States, but try to get the big bulk purchases from South America. But if South America starts to stumble, it's going to force the Chinese hands, and they're going to have to come in and buy U.S. grain.
And is there enough going on here that we're going to have to worry about anything happening based on what happens with these grains going to China in the livestock markets?
Well, I think you really got a real concern right here in the United States. We know we just had a big group come out and do a big crop survey tour over the past week. And, their yields were down toward the national yield. They're projecting it at 168. Now, we'll see what that number is. That's their viewpoint. We'll get the NASA's viewpoint here. They're going to be in the fields the next couple of weeks. We'll get their first NASA revision of the first look at what they're thinking as they get into the field on the September WASDE. But let's just say, Mark, that 168 number is correct. If you do not make any demand revisions and you're just cutting supply by that much from the current yield estimate, you'd essentially drop your stocks to use to around 8.5%. It drop your carryout down to about 800 million bushels. And the reality is, the market would have to go in the U.S. market would have to go into rationing mode. So it will make the cost of feeding livestock incredibly expensive.
And you had mentioned a little bit earlier the fact that China might be buying some grain from Ukraine. We saw when that very first ship left Ukraine, people had talked a lot about that because we knew then they were going to be able to start exporting. And those numbers have increased in terms of numbers of ships leaving and going to other ports and moving that grain. Have we seen that ramp up to anywhere close to where they would be normally if there wasn't a war going on right now, Jim?
No, they're not even close to it right now. I mean, so they're doing pretty good considering they are got a war going on right now. But they're not even close. They're going to have a lot smaller supply, obviously, because of what's going on with the war, not getting all the acres planted. So the reality is, the Ukraine used to feed the world. They're going to help offset some of the higher prices. But the fact of the matter is, when you got dryness issues in Europe, their world's really going to be counting on the United States, and more importantly, they're going to be counting on South America to have a monster crop. So the thing that the producers out there need to keep an eye on is what's going on in South America. Can they get the beans in early? A couple of years ago, they did not get the beans in early. They were delayed by about a month. That pushed the safrinha corn crop planting, which is the biggest crop Brazilians plant. They follow up after they plant the beans. That crop was late. They ran out of water, and the market really reacted to it. So South America, in my opinion, is going to be the linchpin for the prices in 2023. If they stumble, you got a good shot. Prices will go right back up to the all-time highs.
So with Europe then in need of some grain that they're not going to be able to get from Ukraine, are they going to rely on us anymore? Or are they going to be able to ease some restrictions on some of the GMOs?
I think they're probably going to have to release some of those restrictions. We did see some European countries buy it. I would expect as prices do go higher, they will essentially have to buy U.S. grain, plain and simple. They get it from Ukraine, but the other thing, they're dealing with a major drought in parts of Europe, just like we are in parts of our countries. So the reality is, you have a drought going on in the United States, you have dryness issues in Europe, and you've also got dryness issues in China. And that's not just a grain situation. I know we're talking corn and beans, but depending on this dryness situation plays out over the next couple of weeks and months, now we're looking at winter wheat plantings in the northern hemisphere. So, we can't get a good, start to the winter wheat crop. It's just going to keep this feed grain situation very, very tight across the world.
And one more thing, Jim, with that fluid situation, then with how much Ukraine is able to ship out, are those things kind of already baked into the numbers and what we're expecting? Because we just can't count on exactly how much grain they're going to be able to move.
I mean, right now, I think it's kind of interesting. If you look at where the prices are, up until this last week on the rally up on the kind of the crop tour numbers, the price of grains essentially had fallen back to at or below where they were pre-war. So I think the market in anything is taking a little bit of laissez-faire approach to it, figuring the problems are solved. And that could change on a dime. I mean, the reality is there's a lot of shelling still going on. Only takes one ship to get hit or a couple people to get killed, being, trying to load a ship, and that may change everything. Right now, remember, this is just a temporary decision that has to be re-upped in October. So we'll see if it happens. I think it will, but it's a perilous situation that could change on a moment's notice.
He's Jim McCormick from agmarket.net, covering a lot of different topics for us today, all over the world. That's why we like talking to Jim so much. Jim, thank you for the time, and have a great week.
Thank you for having me on. I appreciate it.
That was Jim McCormick from agmarket.net. As for right now, let's turn our attention to the ag weather outlook.
A cold front moved northwest to southeast through Iowa today, with some storms to portions of the state early this morning, some of which produced hail and gusty winds. As you can see here from the National Weather Service, today partly cloudy skies after the storms moved on. Temperatures range from the low to upper 80s. Tonight, partly cloudy skies. Lows overnight should range from low 50s to low 60s. Tomorrow, sunny skies and mild temperatures. Great weather for the Farm Progress Show beginning on Tuesday. Highs will be in the upper 70s to mid 80s. Now looking at the affiliate weather map for tomorrow, Cherokee and northwest Iowa will see sunny skies and a high of 81. Shenandoah and southwest Iowa mostly sunny and a high around 83. Des Moines will also have mostly sunny skies with a high of 83. Albia mostly sunny and 84. Waterloo sunny and 79. Clinton also sunny with a high of 79 degrees.
For a more detailed forecast in your part of the state, you should check with the local Iowa Agribusiness Radio Network affiliate in your area. That's been a check of the Ag Weather Outlook. And that also brings us to the end of this episode of Ag Matters PM. You can find all of our content on our website at iowaagnet.com. You can also follow us on Facebook, Twitter, and TikTok. And you can find our video content and previous episodes of AM/PM on our YouTube channel. And while you're on our YouTube channel, don't forget to click on the subscribe button. That will notify you whenever a new episode is available. And don't forget our free twice daily market podcasts on Apple, Amazon, Google, Spotify, and Podbean. From the IARN studios in Des Moines, I'm Mark Magnuson. On behalf of Riley Smith and Dustin Huffman, we thank you for watching. This has been Ag Matters PM.